So in this video, I want to walk you through why I borrow money to buy high yield dividend stocks. Now, this method isn't for everyone. There is risk involved. So again, I'm walking you guys through into my account. These are my live numbers for the month to date for November. And I'm just going to walk you through why I can sustain this through high yield dividends and options trading. So if you like the sound of that, all I ask for is smash that like button and don't forget to subscribe. And again, if you want to learn more about my method of growing wealth and how I trade, again, check out my mentorship training course. Hit the join button down below. All the details are down there. What this is a screenshot of my brokerage account for the month to date to November. And what we're showing is the cash position in USD of my portfolio. My starting cash at the beginning of the month was minus $14,000. So I have borrowed $14,000, and some of that I've used to withdraw from my account to buy things such as holidays and various other bits and pieces around the house. But the majority has gone into buying high yield dividends. And again, if you've been watching my channel, you guys know that I invest heavily into tsly, into CONY, which are all YIELDMAX funds, and ULTY, which is the new one I've kind of bought into. And again, I do monthly updates on how much dividends I've been getting from these stocks. So again, subscribe to that if you're interested in learning more about high yield dividends. Now, I'm borrowing this money from my brokerage account at a set interest rate. I'll be honest, I don't even know what the interest rate is. It's probably about 6-7%, something along those lines. But what it is that every single month I get charged an interest amount for the previous month. So you can see here, we'll go into all of these numbers in terms of the breakdowns, but the first main thing about what people ask for or talk about when you borrow money is that you're paying margin or you're paying interest on that actual amount of money. And you can see here that, on 14 grand, and for the previous month, I don't think it changed too much from this. So let's say it was 14 grand. IBK are charging me $80.73. So if we put that in perspective, times that by 12, that is $968. Let's call it $1,000, right? Let's call it $1,000 to borrow 14 grand. It is costing me $1,000 a year. In the grand scheme of things, that's not that much money, right? If you think about it. So if we do 1,000, let's call it 14,000. It's about 7% interest. It will range. And the good thing is that interest, while inflation is dropping, and we know that the Fed's going to start reducing interest rates even more. So therefore, this number, assuming all else being equal with this 14,000, is going to get lower as time goes on. So that's the first thing, is that, yes, there is an interest rate on there. But if we just skip to the end, you can see here I started on 14 grand and now I'm on 13.5 grand. So let me walk you through what exactly happened here through this time period in the first 9 days of November. So the first line here, we've got commissions, and these commissions are going to be on any stocks that I buy, any options trades that I do, all of these good things. Again, it's a minus number, which is, affecting my overall margin, negative cash balance. So this minus $12.73 is predominantly going to be Riot. I've only really traded Riot. And again, I've got videos on that if you're interested in learning about options trading. But my broker for placing an options trade altogether, I've spent $12.73. And what we got here is we've got this dividend line item. And this dividend line item here of $389.09 is tsly's dividend payment for the month of November. Now, I'll do a separate video on this. It is a bit low. I think it was like 56 cents a share. But what I'm saying is that I've generated, so I borrowed pretty much all this 14 grand is helping me produce $389 at least every single month. And last month, it was just under $1,000. So it does vary. I'm not going to say it doesn't vary, but it's more than enough to cover this cost here of $80.73, which is the next line item there. That is, we've got our commissions, we've got our dividends, which are positive, which is bringing money into the account. And then obviously we've got the interest that we're owed for, or we have to pay out for the previous month. And then we've got trades and sales. So this is the cash that I've generated or the gains that I've generated on the options trades or selling stock or anything where I've made a profit or a loss on that has been realized. And in this example, this $216 is for a Riot covered call trade, which again, I paid $12.73 in commissions, but this is how much I gained in cash. Now, the caveat here is that this is subject to capital gains tax. So this 216, even though it's coming as cash, I still will have to pay out the 20% depending on what your threshold is when the tax year comes in. So one thing to bear in mind on that, but it all comes out in the wash in the grand scheme of things. But for this simplicity argument is, I made $216. So we've made $389 and we made $216 through trading and through passive income through dividends. Now, this withholding tax of $58.36 is the withholding tax for the dividends, because obviously the withholding tax here, because I'm a UK citizen trading or have owned dividend stocks from the US, they have held $58.36. So again, that the tax man will sort out for me, but in the dividend example, it's already taken out the tax, and then for the 216, it still has to take out that tax. So therefore, when you add all these things up together, we end up with a negative cash balance of 13.5 grand. So we started the month at minus 14, and currently, month to date, we're at minus 13.5. Again, if I didn't do any additional buys in terms of buying stock, which I'm going to do, I'm going to buy some more high yield dividend funds throughout the month of November, and it will make this number into probably a minus number at the end of it. But the key thing is as long as I'm generating enough dividends and or trading gains or share gains every single month, this 14,000 will reduce down by X amount. So let's say, for example, this was my ending position at the month of November. And in December, let's take this step back, right? I still haven't got paid out for CONY yet. So CONY own 1,000 shares. It paid just under $1,000. If it pays anywhere near that, even if it pays $700, $800, it's again going to take this down from minus 14 down into the minus 12 point something. So this number's going to go down even further. So, but what I do is that I say to myself, okay, I'm willing to hold up to minus $15,000 in cash. When CONY gets paid at minus, and let's say this number is 12.5, right? As an example, I then have 2.5 grand to then go and buy more stock, whether that is in growth stocks like Tesla and Nvidia, or that is in high yield dividends, which is my preference at the moment to beef up this dividend line item. Or let's say I've got to do laminate flooring for my house and I just want to withdraw $500 or $1,000, whatever it is, to go pay for that. This is why I do what I do. Now, obviously, maintaining a negative balance of minus 14K, you do need a decent sized portfolio to not get margin called and all this stuff, which is not in the scope of this video. But I'm quite sensible in terms of when you look at my account value versus the amount of money that I borrowed. And the other thing that's in here, which is in the GBP line item, which is the Great British Pound line item, is that I do have cash in the account, but it's sitting in a different currency, i.e. my local currency or Great British Pounds. And that's bringing in about $40 a month in terms of interest stock, just holding that money. So this minus 80 is technically around minus 40 because I'm bringing $40 in a month anyways. Net, just holding this money is pretty much free for me, but actually I'm borrowing this money to actually make more money. So if I didn't reinvest any of the money, i.e. went and bought more stock and I just let this thing run for a year, eventually this number will go to zero. And therefore all these dividends that I borrowed money to maintain, they will start eking me out a profit every single month. But the goal here is to compound and grow. So I'm reinvesting these dividends back into buying more stocks. So this, like I said, I'm trying to hold a minus 15,000. If I can get to a minus 15,000 and hold it for a year and keep adding 100, 200 shares of stock, therefore 15, 1600, I get a month. Again, the full month hasn't played out, which is why this dividend number is quite low. But let's just, I could get to 2,500, 3,000 a month consistently while maintaining a 15,000 balance. So therefore, if I make $3,000 a month, it's going to take me five months to pay this off with just my dividends. That's assuming that I know options trading, which I do not as actively as I would like to, because this dividends kind of does that work for me. But I can do that if I see an opportunity inside the market that is relatively low risk, that I can go and scout $200-300 a month or every couple of weeks. I will make that trade. And that 216 has really helped me out here to bring this number down. And this is what I call added bonus, really, to be fair. The dividends will cover the interest, and the rest of the dividends will look to go buy more stock. Anything I can do in this trade sale line item here, this 216, for example, in my view, I just treat as free money, which is just helping me bring this number down lower. So this is why I borrow the money, because there is a method to pay this money back. Yes, NAV erosion, all these things that you guys might say inside the comments, which I do agree with. But again, it's going to be NAV erosion of money that isn't mine. So that's why I don't want to use my own money. So as long as this method is sustainable for 12 to 18 months, while that money gets paid back through dividends and through options trading, and I get that balance back down to zero. Therefore, it doesn't matter if the stock goes to zero. I've already made my money back. Anything I get above that is just pure gains and cash flow that I can use passively to do what I need to do, to go borrow more money, to go buy more stock, or to go withdraw it. Again, if you've got any questions, comment down below. But I really hope you found this video quite educational. And again, check out the mentorship if you guys are interested. And I should see you guys in the next video.